everybody. Hey, traders. Chris Pulver here. Welcome back to another earnings segment. This is with Eightcap's Masterclass. So a video I sent out earlier, I was looking at a couple earnings plays this week. We have a short holiday week. Martin Luther King Day on Monday, Tuesday to Friday. Markets are moving. We've got some volatility, some risk-off flows, good dollar movement, dollar strength. Forex-wise, actually, things have been great this week. I've got some running positions on Pound Aussie long, Pound New Zealand long, Euro New Zealand long. Those are playing out really nicely, and the dollar's been pretty strong against the Aussie, the New Zealand, and the CAD. When it comes to trading stocks, looking at options, trading some big companies in the U.S., two plays that stuck out this week to me were Alcoa, which is AA, and TSM, which is Taiwan Semiconductor. I did take a trade with my trading room on Tuesday. We got into two positions on Alcoa. We did a straddle, which was essentially just where price was at. We bought a position and we sold a position. So we're looking to see where price goes, and we're already profitable on it today. So we did take a small profit on that today. The other position was a little bit more. We bought a little bit higher. We sold a little bit lower. It lowered the cost basis for us, and we took profit on that as well. So I'm not going to take an earnings play on Alcoa because I got in yesterday. It was already profitable. I'm taking a profit. Overall, it made me about 18% of that position. That's 18% on that position. And then TSM, I priced out the numbers today, and I just didn't love it. The earnings report on TSM is actually Thursday before market open. So you'd have Thursday, Friday to manage if you wanted to go out to this week's expiration, which is the 19th. I was looking at pricing in some option trades and looking at TSM as a potential straddle, or going long, going short, and going out to the 26th and kind of giving this about a 7 to 10 day window. I just didn't like the pricing, so I'm going to pass on TSM. And here's another reason why. Go into next week. We have 2 more weeks in January that are going to be very, very busy. So January 22nd through February 2nd, we have a ton of earnings and a ton of notables, and so I want to point out some of the big ones. Some of the airline stocks. We have Southwest Airlines is LUV, UA is United Airlines. Delta's been the one that's probably been the most resilient, but I'm certainly interested in buying low with airlines, cruise lines. So I'm in Carnival Cruise Lines, which is CCL. I'm in Norwegian Cruise Lines, which is NCLH. I've been trading those a lot the last couple of years. Johnson & Johnson, I think the healthcare space is really important for the next 3 to 5 years. Johnson & Johnson came up with some great lows at 150 and 155. It's off those lows. I want to see if we get a chance to participate in that. D.R. Horton, that's a big builder. Some of your other builders, Toll Brothers, Lennar, Pulte. Essentially the big question right now with housing is, will supply catch up with demand? And if it's a good earnings play, I'll take it. 2 big ones here that I think are no-brainers to look at and try to trade during earnings would be Netflix and Tesla. Netflix is looking to roll out some type of ad revenue tier, and that's good for the company, good for the bottom line. I think it's going to suck to be a subscriber and all of a sudden have commercials on your Netflix stream. Obviously, you'd have to pay to maybe not have that, but anyway, that could be really frustrating unless it's like a lower tier membership. We'll find out as a consumer what it means, but as an investor, decent volatility and high expectations for Netflix moving forward. I think the streaming space is still cemented Netflix in the high market share and competitive advantage there. Tesla, big one. Elon Musk is probably causing more drama for the company than anything else, but it's still a tech play. It's still a battery play. And the stock is usually very volatile around earnings. So as long as it's priced out accordingly, I like, again, long position, short position, and see where volatility takes us. Cut the losers off quickly, let the winners run. Comcast had a good run on that the last couple of years. Made some good money on it, and let's see if we have some positions there. Intel's kind of right now it's like the inexpensive chip producer. And, everyone's excited about, TSM or excited about NVIDIA or excited about AMD. But Intel had an amazing run. In my trading room, we were participating in that around $27, and it ran all the way up to $40, which doesn't seem like a lot, but that's a big increase off those levels. We made some good profits on that. So that's another one that could have some good upside potential and continue to grow in the wake of this higher demand for chips. And Intel's one of the big producers here in the U.S. Capital One and Visa, kind of the health of the consumer and spending and things like that. So big notables there. And I would say that of this list here, most likely Netflix, Tesla, if it's priced out accordingly, I'll play options on those and play earnings on those. Intel, if it's feasible. Visa, Capital One, depends. But I'm still looking at this. I think right now it's going to be an interesting dynamic between the small caps and the large caps. So if you're large cap tech, I think we've had some good runs. They carried the market all of last year. I think this is a bit of a catch-up trade, which could maybe favor the small cap. So I'm trading the Russell 2000. I actually just took a position today to go long in the Russell around 187, 187.50. And yeah, I think that small caps are going to catch up. So let's go to the charts really quickly, talk about a couple things, and I'll let you go for this little segment. So let's go into the charts. Here's the IWM. We're trading at 189. I just put in a 187 by 185 for 62 cents. I'm looking at it this way. If we have from this holiday rally, which the IWM, by the way, did outperform all the other major indexes in the US. If we have this pullback and we put in a bit of a bottom right here, then I think that IWM will continue to head higher. And the good thing is if I'm right on this, if I can actually, gauge this level around 187, 187.50, and this is going to be the low. If we break above 199 again, or we break above 200 with some confirmation, then there is a lot of space all the way up here to maintain a bullish position. So holding the IWM at least in the next, let's say, 3 to 6 months. The market still expects the Fed to cut. I was looking at that tool this week as well. There were some Fed speakers coming out with some headlines. We have the World Economic Forum going on this week. Let me go into the CME Watch tool. So the market is still expecting to see the Fed, and again, this is all subject to change, but the market is still anticipating that the Fed's going to be 150 basis points softer and more dovish than it is right now. Rate decision for January is not going to change. March is still an anticipated rate cut. This is changing, though. I just did this morning. This was 58% this morning. Now it's 55%. So perhaps the market is starting to stand off a little bit and say, well, maybe the Fed's not going to be as dovish. Maybe that rate cut isn't coming in March. Maybe it's going to be later in the year as the coast is clear, because inflation numbers are a little bit higher. Inflation numbers for the U.S. printed higher for year over year. This week, inflation numbers for Canada printed higher year over year, as well as the UK. So they say sticky inflation. It's happening. Does that drag prices? It certainly, makes the central banks take a look at their monetary policy. Is it time to start cutting rates? Is now the time? Or if they start cutting rates and it's premature, too early, is there going to be an overreaction to higher inflation if we have another wave of it, right? So this is changing, every single day. And I'm going to be curious as we come into the Fed meeting on the 31st and wrap up the month, if this is now, kind of neutral, where the Fed says they're going to not do anything for January, but going into March, how does this change the market moving forward? Because, right now, look, January to May, typically it's bullish for the stock market. We've obviously had a good recovery since 2023. So we're going to see if that momentum continues, but it would make sense technically that we need a pullback. I think I mentioned this in the video that I posted earlier this week. There is a pretty ridiculous trade here on the DIA, and I am currently short. I have an option trade on the DA where I'm looking to favor this to the downside. And the reason why is right here. It's one of the kind of the best technicals that I've seen in a long time. We have a ridiculous amount of pivots. So we have 7 weekly pivots in a row, which is insane. We have a monthly pivot for January that still has not been hit. We have a yearly pivot, and we have a monthly pivot for December. So just based on this low and this high, I'm looking for price to pull back into some Fibonacci levels. I'm going out to probably the first or second week of February to see if this market will correct. It might be around the Fed that it does it. We will see. All right. So I think in the near term, the U.S. markets will pull back. Another reason I think this as well is because the dollar has been ripping aggressively to the upside. So having risk-off flows on the U.S. dollar is starting to be more weight and drag on the stock market to struggle to go higher. So I think the dollar has some more room to the upside. It's been performing really well against those commodity pairs. Energy prices are down. Oil prices are down. Gold is down. Silver is down. Copper is down. Right, so dollar strength has been doing pretty well against the Aussie, the New Zealand, and the CAD. The euro, the pound have been pretty resilient, but I think the dollar still has room to run and get some strength in the short term. I think that will lead to some, like I said, some drag in the stock market, at least for some short-term corrections, and then we'll see where investors want to come back in and possibly buy that dip. So for this video segment and recap, we do have the plays I wanted this week. I traded Alcoa. I didn't like the pricing on TSM. We still have some more financials to come in this week, but this is, again, a quiet week with a holiday interruption on Monday. So Tuesday to Friday, only 58 companies. Next week, there is a lot more. If I go into, that's the calendar. Let me go into the earnings report right here. So if I go into the earnings for next week, just on the 22nd through the 26th, let me add it up here. I think we have, I want to say 500 companies, or maybe it's 200 some companies, 43, 69, 88, and 15. So we have 232 companies reporting the 22nd through the 26th. We go out another week. That's when we get into like a ridiculous amount. We get like 500 or 600 companies reporting the 29th through February 2nd. So we're just heating up in earnings season. Stay tuned for more.